For more on Amazon, let's bring in Gil Luria of DA Davidson and Maxim Group's Tom Forte. Great to have you both here. Gil, I'll start with you. Your initial reaction, especially when we saw so many of the key metrics come in better than expected, starting with perhaps AWS.
That's by far the most important number here. Not only is that 17% a lot better than expected, it's more acceleration than Azure and GCP had last week. I can't overemphasize that. They're accelerating faster than Google and Microsoft, who are always in the AI debate. That makes it look like AWS is now catching up on AI and perhaps in a position to lead. Let's not forget their business is a lot bigger than Azure and GCP. Their foundation is from chips to the SageMaker foundation model to Bedrock facilitating other models to Amazon Q, which they announced today, which does a lot of things for enterprise that every other software company is trying. And now Amazon is telling them, no, don't worry about it. We're going to do this for the enterprise. So that's a very important result. Everything else almost pales in comparison.
Tom, what to make of the broader profitability picture? And I ask that knowing we got those North American margins that came in stronger than expected. And as Adam Christofouli was telling us, that's such a key metric to look at. Free cash flow also improving, more than $50 billion there. And then the high margin advertising business coming in strong too, at a time where we know Amazon and all of its peers in the mega cap space are pouring so much money into generative AI and these new AI applications. The fact that they are coming in with better profit numbers tells us what?
It tells us that Andy Jassy's emphasis of services for Amazon is working. And when you couple that with his very aggressive expense management, you're seeing these impressive margins. So in addition to Gil's comments on the strength of AWS, you saw the strength of advertising, and you're seeing the benefits for North American retail of the aggressive cost-cutting moves by Andy Jassy. So I think that that's what you're seeing across the board, an emphasis on higher margin services and aggressive expense management, resulting in very impressive margins and profitability for Amazon.
Gil, do we have to revisit the narratives here? And I hate how stock price moves can sometimes end up equaling truth for people, at least for a period of time. But the narrative for a little more than a year has been Amazon's behind in AI because, in part, Microsoft's partnered up with OpenAI, et cetera. Google was supposed to be behind, too, but now people don't think that anymore because the stock went up. OK, Amazon seems to have intentionally released Q on the same day as earnings, perhaps driving home something about the cloud growth and the AI strategy behind it. So what should investors take away from that?
Yeah, that's exactly right, that they may not have been as ahead of the game as Microsoft was. Let's not forget, Microsoft was well ahead of the game. GitHub Copilot came out in July 2021. We didn't even know about ChatGPT back then. Microsoft did an incredible job of capturing that value and continuing to run with a lead. But Amazon stepped back last year and said, well, what do we want to do? We want to build a whole infrastructure for our enterprise customers. We're not going to be as worried about consumers and consumer applications. We're going to develop the whole infrastructure so our existing AWS customers can execute on what they want to do with generative AI. And that's what we're seeing today. And let's not forget another very important piece that we can now piece together between the three results. It's not just AI that's driving acceleration for the hyperscalers. Both Microsoft, Google, and now Amazon have accelerating growth beyond the contribution of AI. For Microsoft, it was 2 points of acceleration excluding AI. For Google, it was the same. And I would imagine that a jump from 13% to 17% growth for AWS, which again is a $100 billion business, has to do with enterprise spending on cloud easing up.
Right.
That's good news for Amazon. It's good news for the rest of the market as well.